In this video, we will illustrate how to prepare a bank reconciliation. The bank and the company maintain independent records of the checking account. People tend to assume that the respective balances will agree. In fact, the two balances are seldom the same at any given time, and both balances differ from the correct or true balance. As a result, we need to make the balance per books and the balance per bank agree with the correct or true amount. This process is referred to as reconciling the bank account. The need for agreement has two causes. The first cause is time lags. Time lags prevent one of the parties from recording the transaction in the same period as the other party. Time lags occur frequently. For example, several days may elapse between the time a company mails a check and the date the bank actually pays the check. A time lag also occurs whenever the bank mails a debit or credit memo to the company. The second is errors. Bank errors are infrequent. However, either party could accidentally record a $450 check as $45 or even $540. The bank reconciliation should be prepared by an employee who has no other responsibilities pertaining to cash. If a company fails to follow this internal control principle of independent internal verification, cash embezzlements may go unnoticed. A bank reconciliation is typically divided into two sections. The bank section begins with the balance per bank statement and ends with the adjusted balance. The book section, which is the company records, begins with the balance per books and also ends with an adjusted balance. The adjusted cash balance per bank must equal the adjusted cash balance per books. A check that is not paid by a bank because of insufficient funds in a bank account is called an NSF check. When a previously deposited check bounces because of insufficient funds, the bank deducts this amount from the company's bank account. The company will need to recreate the receivable and reduce cash. The bank statement side contains items not yet recorded by the bank but recorded by the company, or errors made by the bank. Our first step is to add deposits in transit. These deposits have been recorded by the company, but not by the bank. The second step is to deduct outstanding checks. These checks have been recorded by the company, but they have not been paid by the bank. Step 3 is to add or deduct any bank errors. As I stated earlier, bank errors are infrequent, but if an error is made by the bank, it is a reconciling item in determining the adjusted cash balance per bank. Similar to the bank side, we can break down the reconciling items on the book side into 3 steps. The first step is to add any unrecorded deposits. Any unrecorded amounts should be added to the balance per books. For example, if the bank statement shows an EFT from a customer paying their account, this amount should be added to the balance per books on the bank reconciliation. Step 2 is to deduct unrecorded payments. Any unrecorded payment should be deducted from the balance per books. For example, if the bank statement shows a service charge or an NSF check, these amounts are deducted from the balance per books on the bank reconciliation. Step 3 is to either add or deduct any book errors. Only errors made by the company, not the bank, are included as a reconciling item in determining the adjusted cash balance per books. To illustrate it, the bank statement shows a balance per bank of $15,907.45 on April 30th. On this date, the balance of cash per books is $11,589.45. The company identified the following reconciling items for the bank. The first is add deposits in transit in the amount of $2,201.40. The second is to deduct outstanding checks in the amount of $5,904. In this example, there are no bank errors, so the adjusted cash balance per the bank is $12,204.85. Reconciling items on the book side relate to amounts not yet recorded on the company's books and include adjustments for unrecorded deposits, unrecorded charges, and company errors. To determine whether you add or subtract the error, prepare the correct journal entry. So identify the accounts, the debit, as well as the credit. Then prepare the entry that was entered into the accounting system. Compare the two transactions to determine whether cash should be increased or decreased. In this example, the company wrote a check to a supplier in the amount of $1,226, but the accounting clerk recorded the check as $1,262. So let's identify the correct entry. The entry that should have been made would have been a debit to accounts payable and a credit to cash for $1,226. Let's identify what actually happened. Right? What actually was entered into the accounting system was a debit to accounts payable and a credit to cash for the amount of $1,262. The error of $36, which is the difference between $1,262 and $1,226, is added to the balance per books because the company reduced the cash account by too much when it recorded the check as $1,262 instead of $1,226. The company identified the following reconciling items per books: an unrecorded electronic receipt from a customer in the amount of $1,035, as well as an error of $36. They also determined the following unrecorded charges: an NSF check in the amount of $425.60, as well as a bank service charge for $30. The adjusted cash balance per books of $12,204.85 agrees with the cash balance per bank. All items on the book side of the bank reconciliation require journal entries. If these items are not posted, the cash account will not show the correct or adjusted cash balance. No entries are made for the bank items. A payment of an account by a customer is recorded in the same way whether the cash is received through the mail or electronically. The entry debits cash and credits accounts receivable, in this instance for $1,035. The correcting entry needs to increase cash, so we will debit cash and credit accounts payable for $36. The entry to record an NSF check is to debit accounts receivable and credit cash. In this instance, it's $425.60. Fees for processing debit and credit card transactions and bank charges are normally debited to bank charges expense. In this example, we would debit bank charge expense and credit cash for $30. After posting the entries, the adjusted cash balance in the ledger should now agree with the adjusted cash balance per books in the bank reconciliation.